Buying property in Dubai can be highly lucrative, but only if you know what you're doing. Many investors lose money not because the market is flawed, but because of preventable mistakes driven by false expectations. Understanding what not to buy is just as important as knowing what to invest in. If you are interested in investing in Dubai real estate and want any help, book your free consultation call with the first link in the description. Unlike some global markets where location alone dictates value, Dubai's real estate market functions differently. There are no inherently bad areas. The key lies in aligning investment strategy with realistic outcomes. Let's break down 4 common investor mistakes to help you avoid them and make better, more informed decisions. One of the most common strategies is flipping off-plan properties, buy early during development, sell before completion, and walk away with a profit. On paper, it seems simple. In reality, it's far more competitive than it looks. The mistake here is entering too late, for instance, purchasing during the final phase of a project where prices are already inflated. Developers often increase prices by up to 30% between the first and final phases. Investors who get in early benefit, while latecomers are stuck with overpriced units that are hard to resell. Further complicating resale are transaction fees and developer payment thresholds. Buyers would rather buy an earlier phase unit at a lower price than pay premiums on a final phase resale. Unless you secure an exceptional deal in a rare or exclusive project during the earliest phase, flipping off plan is unlikely to generate the fast profits you're hoping for. Many investors are lured by advertisements promising 8 to 15% rental yields in prime areas. But these returns are often exaggerated. The real average rental yield in Dubai hovers around 6%, and that's before expenses such as service charges, maintenance, and agency fees. Another mistake is buying smaller units at a premium price per square foot. Tenants evaluate rentals based on livable space, not your purchase price. Buying a small brand new unit in a flashy building can look good at first glance, but the returns might be underwhelming. Often similar properties in slightly older buildings nearby offer better value and the same rental income, sometimes 20% cheaper. When buying for rental income, research is essential. Analyze price per square foot, compare surrounding buildings, and determine whether the premium is justified. If not, skip it. 3. Underestimating renovation challenges. Some investors aim to replicate renovation and resale strategies that work in other countries. The idea: buy a dated unit, renovate it, and sell at a profit. However, this approach in Dubai is not as straightforward. Renovations require specific permits, and the approval process can be lengthy and complex. Miscommunication with contractors is another frequent issue, especially when there's a language barrier or differences in construction standards. Moreover, expectations from buyers in Dubai are different. Luxury finishes are often expected. Cutting corners with cheaper materials or basic design upgrades may not justify the premium you're trying to charge. Without the right contacts, permits, and experience, renovation flips can lead to delays, high costs, and underwhelming sales. 4. Falling for the dream that isn't there. Many buyers are sold on the lifestyle vision: waterfront views, lush parks, and vibrant retail streets. The problem? These are often future promises, not current realities. Off-plan marketing material often uses CGI imagery and polished brochures, but until the infrastructure is actually built, roads, schools, shopping areas, healthcare, public transport, the value isn't truly there. In some cases, promised views are obstructed by new developments. If you're planning to live in the property or want long-term value, visit the site and evaluate the actual state of the community, not just the marketing. Doing proper due diligence on the developer's track record, timeline delivery, and surrounding infrastructure is critical. Buying into a dream that never materializes can leave you stuck for years or force you to sell at a loss. Conclusion: it's about strategy, not speculation. In all 4 cases, the core issue wasn't the location. It was the mismatch between expectation and reality. The Dubai market has immense potential, but only for those who understand its nuances. Don't expect fast profits from late-phase off-plan units. Don't rely on inflated rental ROI figures without research. Don't underestimate the complexity of renovations. Don't trust the brochure alone. Verify what's actually built. Before investing, always do thorough analysis. Look at comparable properties, understand market averages, review developers' histories, and consider local regulations. Whether buying for income or personal use, Getting expert advice can help ensure your investment aligns with your goals and avoid becoming another cautionary tale in Dubai's fast-moving real estate market.